Welcome everyone, my name is Vishal Tikshilani and it's that exciting time of the year where I'll be revealing the most tipped ETFs picked by Livewire and Market Index readers. So every year we run what's known as the Outlook Series survey, and for the 2026 survey, which we conducted just before Christmas, we had nearly 5,000 respondents tell us what they think are the ETFs that will sizzle in the year ahead. Now, as important as it is naming the ETFs, one of the key benefits of this survey is that we get to understand how broad themes investors are thinking about change from one year to the next. I'll first reveal the top 10 ETFs as voted by our readers for 2026, and then I'll compare the shift in their thinking to 2025. Let's get into it. Starting at number 10, we have the VanEck MSCI International Quality ETF. QUAL targets high-quality companies across developed markets, focusing on factors such as high return on equity, earnings stability, and low leverage. It remains a staple for investors who want that additional layer of fundamental screening within their equity exposure. At number 9, we have the Betashares Global Cybersecurity ETF. HAC provides access to companies operating in the global cybersecurity sector. As digital risks continue to grow, this theme remains relevant for long-term investors. In 8th place is the Betashares Australia 200 ETF. A200 tracks the S&P ASX 200 index, offering exposure to Australia's largest listed companies at a competitive fee, making it a popular core Australian ETF. At number 7 is the Vanguard MSCI International Shares ETF. VGS tracks the MSCI World ex-Australia Index, providing exposure to over 1,500 companies across developed markets. It's widely used for low-cost global diversification. The 6th most tipped ETF is the Global X Physical Gold ETF. Gold provides exposure to physical gold, which is traditionally used for diversification, inflation protection, as well as being a defensive hedge during periods of macro and geopolitical uncertainty. In 5th place is the iShares S&P 500 ETF. Now, this was the most tipped ETF last year, so it's dropped a couple of places. IBB tracks the S&P 500 ETF, providing broad exposure to the largest US companies across multiple sectors. It remains a popular way to access the depth and breadth of the US equity markets for growth-oriented investors. The 4th most tipped index fund is the Global X Copper Miners ETF. Wire offers global exposure to copper miners, a critical link in the supply chain supporting electrification, infrastructure, and of course, to the AI boom. Despite copper's importance to Australia, the ETF is predominantly offshore, with Canada and other international producers comprising much of the portfolio. At number 3 is the Betashares NASDAQ 100 ETF. NDQ tracks the NASDAQ 100 index, offering exposure to large, non-financial US growth companies including Nvidia, Alphabet, Microsoft, Tesla, and Costco. Now, technology and AI leaders make up a significant portion of the portfolio. The 2nd most tipped ETF is the Vanguard Australian Shares High Yield ETF. For investors seeking a stronger tilt towards dividends, VHY targets Australian companies with market-beating dividend yields. It appeals to income-focused investors with significant exposure to banks, resources, and established blue-chip companies that typically provide a high level of franking. And in 1st place is a true Australian classic, the Vanguard Australian Shares Index ETF. VAS provides exposure to the S&P ASX 300 index, so the top 300 companies in Australia. It is a staple holding for investors seeking diversified exposure to the Australian share market, with the prospect of some growth and some franked income and dividends that come with this strategy. Okay, so those are the 10 most tipped ETFs for 2026 as picked by our readers. Now, given we run this survey annually, the changes in the ETFs our readers pick from one year to the next provides big clues as to where they believe the best opportunities are going to be over a 12-month period. So if you look at the 10 most tipped ETFs of 2025, you'll see a far more global and less thematic list compared to this year. What our audience believed would do well was broad US, global, and Australian exposure with some conviction in tech shares, so to play into the AI theme. Now, that's evident in choices like IBB, NDQ, FANG, and VAS. So we had a lot of global equity with a bit of Australian value and income. And this strategy did really well. It generated a 12% total return in 2025, which was ahead of the S&P 500 and ASX 200 total return at the time we cut the data. So coming back to this year's most tipped list, the difference is quite meaningful. In 2026, the audience is going big on Australia and they're going deep in commodities while still retaining global exposure. Just not as much as last year, suggesting some home bias may be a good thing this year. 5 of the top 10 ETFs now either track the Australian share market or provide direct exposure to commodities, up from just 2 last year. And I want to talk about a couple of the ETF combinations selected by the audience. So the first thing you'll notice is that they picked VAS, VHY, and A200. Now, my opinion is that the audience thinks this will be a great year for dividend and capital growth in the local market. If commodity prices keep climbing or hold up, the resources sector, which these ETFs have a significant exposure to, could be in a position to splash cash back to investors. And of course, the banks are expected to keep paying stable and attractive dividends. Let's talk about wire plus gold. These are the 2 explicit commodity calls made by the audience. So wire provides exposure to copper miners, and copper is one of the hottest industrial metals right now. But why? One key reason is that the global tech sector is expected to spend more than $2 trillion on AI infrastructure over the next decade, and copper is a key element of that story. BHP itself projects that copper used in data centers globally will grow 6-fold by 2050, from around 500,000 tons a year of copper today to around 3 million tons per year. Now, audience picked the physical bullion over gold equities with the gold ETF. This suggests to me that investors want exposure to the metal for its traditional purpose as a hedge against risk and inflation, and there's plenty of risk in that regard going on at the moment. Venezuela, the Middle East, Europe, and the US, and the trade relation havoc that we're seeing around the world. Now, lastly, this list also contains a good number of international funds like NDQ, IBB, and QUAL. The mix points to a more balanced approach, pairing global growth with domestic income, resources, and diversification, and continued conviction that the AI trade will still deliver, given the amount of exposure these funds have to the tech sector. I hope that explanation helps you make sense of the direction in markets that some of the savviest investors in Australia are taking this year. But please remember, this is not advice. Like any investment, these ETFs do come with risks, and the forecasts may not eventuate if market conditions change. So please do your own research and stay on top of markets. If you want to access the full tables, the amount of votes, more information about the funds we talked about, and other interesting ETFs picked by our audience, please head to the description and click on the link to the article associated with this video. Click on that and you'll find plenty more information on our website. And please give this video a like and subscribe to our channel. My name is Vishal Texalani. Happy investing in 2026.